Hey there, and welcome to this episode. And today I'm talking about superannuation. Now, superannuation is one of those topics that tends to make people's eyes roll. If you ever want to help someone get to sleep quickly, start talking about superannuation. But I've been in the finance industry for over 20 years, so very familiar with talking about superannuation. So I want to start with the obvious, right? What is super? Well, superannuation is simply a vehicle for holding your retirement savings, okay? It's a vehicle for doing it, and it's a tax vehicle. A lot of people say my super's an investment. Yes, your super invests, but your super is really a tax vehicle. And the attraction of superannuation is that it's a low tax vehicle. So during your working life, your superannuation is in what we call the accumulation phase. And that phase, it's taxed at a maximum of 15% on the earnings. And there's also a thing called contributions tax when you put the money in, which is also 15%. However, when you get to retirement, this is when it gets really attractive. So when you retire and you've ceased work, your super fund becomes a pension account, what's often referred to as an account-based pension. And this is very attractive. If you're over 60, that pension that comes out is tax-free. Not only is it tax-free, it's not assessable, so you can have other income from other sources that are taking advantage of things like the tax-free threshold, for example. Now, the issue, though, is that your super in retirement is tax-free. So not only is it a tax-free income, but the structure itself is tax-free. So there's no capital gains tax, no income tax on dividends, and so forth. So superannuation is enormously attractive. Now, are there some positives and negatives to think about? Well, the negative, of course, is that particularly if you're young and you're putting money into super, you can't touch it for a while. Now, the earliest you can generally get any of it at all is age 60, and you have full access from 65, unless, of course, they change the rules. But the point being is that superannuation is a long-term thing, and any money you put in there, you will not be able to access generally until you reach what they refer to as preservation age. But on the positive side is you can save an enormous amount in tax, and that's the reason why the government has it structured that way. It's deliberately designed to be low tax to get you to save and provide for yourself in retirement, okay? But it's a low tax structure, and that's why you should give it serious consideration. So anyway, that's a bit of an introduction to superannuation, and I hope that was helpful just in terms of clarifying why it's so worth considering. Thanks.